What is going on YouTube? It's Sankey. We're back with another one. So I want to share with you guys my inspiration for making today's video. Now I got a question from a subscriber. Amnil says that they're fresh, brand new to investing. They're looking for stocks to invest in and they have no current stocks in the portfolio. So firstly, I want to say a big congrats to you for making your first steps to getting into the stock market, because if you invest correctly and consistently, it can change your life. So I'm happy to support you and be a part of your journey. Now guys, in this video I'm coming at you with a couple of plays that have dipped over the last couple of days and they're looking like very good buying opportunities to help build out your portfolios. Now one of these plays is growing rapidly, yet there's still a huge addressable market for them, so there's a lot more room for them to run up. The next play is looking cheap relative to the peers in the industry, yet they're still growing fast. And the next play has beaten analyst estimates over the last 2 years. So guys, I'm coming at you from all different angles in this video. Now you always ask me, how do I pick my plays? Well, here you go. There's 3 examples in this video. Now, as always, I've got a jam-packed one for you, so do make sure you stick this video all the way through with me. Now, let's jump into the first play. First up, we have NEO Technologies. Now, this is a play that I've been putting the channel on for months now. This is one of the most highly underrated EV plays out there. Now, if you don't know NEO, they're an electric scooter company. They service the Asian market and they operate internationally in Europe as well. So in today's market, it's rare that you'll find a high growth play that hasn't been priced up extortionately. But in the case of NEO, their price to sales is around 10 times, which is a lot lower than their peers, which is often 20 times price to sales or higher. So with NEO, you're getting a cheap deal. And when I first put them on the channel, they're operating around 7 times price to sales. Now they differ wildly from other EV plays. One of the reasons is because other EV plays come out with their delivery numbers each month. NEO, they release their delivery numbers each quarter. So over the last couple of months, this play has been flying silently under the radar. So there's a couple of things I like about this play that I want to put on your radar. Like I said, they are growing fast. So their Q3 grew 60% year on year in their delivery numbers. And then for Q4, it was 40%. So these are some good numbers that they're reporting. Now, I also like the fact that they are net income positive. We don't often see EV plays that are net income positive. So this plays to NEO's favor. Now, also what I think is one of their kryptonites is their international sales. There's a lot more room for that to grow, and it is growing fast at the moment. So I have my strike price set on this one at $48, so do consider them. Now, what can we expect from NEO going forward? As I mentioned, they come out with quarterly delivery numbers instead of monthly, so they do lack the volume of PR compared to some other EV plays. But if you're willing to be patient with this one and wait it out, I do think that they can add 50 to 75% on top of their value this year. Next up, we have ROKU. Now, this is a high growth streaming play that put the channel on when they're in the low 300s, and they've been growing ever since. Now, right out the gate, I want to tell you guys, you don't have to buy the full $400 share. You can buy fractional shares, whether that's $50 of it, $100 of it. So don't let the price tag put you off having this play in your portfolio. Now, there are 2 key things that are playing in ROKU's favor, which are going to give that share price some good momentum this year. The first is that they're growing rapidly. The second is that there's more advertising revenue shifting from traditional TV over to streaming. So just this month alone, ROKU's completed 2 expansion projects, and I want to make sure they're on your radar. The first is they've acquired a company called Quibi, which increases the number of shows that ROKU offers. The second is they've partnered with Amazon streaming app. Now the full terms of that have not been disclosed, but I do think this is going to be a good thing for the business going forward. So in terms of what we can expect going forward to push that share price up, they are looking at international expansion. They've highlighted the UK and Brazil. Also, we should be looking out for further acquisitions and partnerships that are going to increase their show offering. Now, also their CEO has come out and said that they have 50 million active users, which is a big increase on last year, but that total addressable market is standing at 1 billion. So they own a very small portion of the overall market. So there's a lot more room for this play to run up. Now, given the growth of this company, I do think they're going to come up with some great numbers in their next report, which the date hasn't been set yet, but this just gives us time to load up on this one. Now, I want to put on your radar that the Bank of America has come out very recently over the last couple of days and revised their price target on ROKU upwards to $500. Now, I do think ROKU can surpass that by the end of this year, but this is good to know that we have the backing from Wall Street. So in terms of my strike price on this one, is set at $400. If you can catch them under 400, do consider loading up, because I do think they can repeat 2020's growth story this year. Now, as you guys know, I always have my eye on the stock market for us looking for those opportunities, and we potentially have one in this company right here. This is Teradyne, the ticker symbol TER. Now, Teradyne is a testing equipment company with a particular focus on semiconductors. Now, we know that's a massive space at the moment due to their applications such as 5G. Now, the kicker with this play is that they're coming out with their earnings after market hours close today on the 27th of January. And they have a good track record of smashing analyst estimates, which they've done over the last 2 years. And over the last 4 quarters, they've beaten estimates by an average of 15%. So these are some good numbers. Now, again, I do expect them to outperform analyst estimates again. And hopefully there could be a good increase in that stock price for a growth play. This isn't a penny stock, so you're not going to see this one double overnight, but a modest increase for a growth play. My plan going forward again is to hold this one long term, that's 12 months or longer, because like I said, they grow year after year. And that's what you want in your portfolio. You want those plays working in the background, generating you money. Alright guys, so it's our session on catching a runner, where I give you guys my 2 cents on the most popular ticker that you guys send to me. Due to very popular demands, we're going to cover our play, that is DSG, that's the electric vehicle distributor. Now guys, what I'm seeing from that share price is good stability around that 90-cent mark. This is good signs. This isn't a bad thing, because what it shows you is that, like I say, there's investor conviction and support behind this stock. Otherwise, it would just drop through the floor. Now, there haven't been many updates since I last covered this stock. The latest is that they come out with a new website. So if you haven't checked it out, I'd advise you to go and have a look at it. Now, what I will say about DSG and other penny stocks is they're heavily reliant on volume of PR. So as you've seen from Crowd Commerce, yesterday we saw that share price spike up because the business came out and delivered some PR. So without DSG coming out with any PR, it's unlikely you're going to see that stock price move up too much. So in terms of what we're waiting for, really looking for strong pre-order numbers as well as booked revenue in any 2021 financials. Those are the kind of things that we want to keep our eye on the market for. Now remember, this company is forecast to do around 60 million in revenue across their 2 subsidiaries, and this is a large number if you compare it to their market cap, which is sub $80 million. If you've been rocking with the channel, you know what time of the day it is. And this question comes from Paul. He says, what's the best strategy for buying various stocks on a small budget? For example, if I have 1K to spread across 5 different stocks, how do you decide how much to buy? Is it simply a case of dividing the 1,000 by 5 and spreading it evenly across all stocks? This is a great question. First things first, you can invest into the stock market no matter what your budget is. So don't wait till you have more money to invest into the stock market. Start straight away, even if you have a small budget, because over time, everything's going to accumulate and you're going to get accustomed to the mechanics of the stock market. So first off, you must clearly distinguish the difference between a penny stock play and a growth stock play. Now, there are dividend stock plays, but we're going to focus on the penny and the growth. Penny stock plays, a lot cheaper in value, a lot more volatile, more risk, higher reward. Growth stock plays, a lot less risk, they can grow steadily over time. I like to see them as the engines of your portfolios. I would say keep the majority of your portfolios in growth stock plays. Me, I have over 95% of my portfolio in growth stock plays, less than 5% in penny stock plays. Like I always say, I look at penny stocks as a way to blow off a bit of steam until I can find those penny stocks that can graduate into long-term growth plays. So in terms of how to decide how much of each stock to buy, as you mentioned, the simple way to do it would be to split that pool of capital across each stock. But that's not how I do it, because I have all companies forecasted to grow at a different rate. So it makes way more sense for me to allocate more company to those that are going to grow faster, and that is how the big funds do it. So once you have your pool of plays ready, you can allocate more capital to those that you think are going to grow fastest. Now, if you're stuck on this, I have my full portfolio breakdown over at the Patreon, where I'm showing you guys how much I think each one is going to grow by the end of the year, so we can get some of those high growth plays into your portfolios, and we can get your portfolios moving in the right direction this year. So as always, thanks for tuning in. Do hit that like button for me. It really helps the channel out. If you're new, hit that subscribe button. Come and join the family. As I always say, stock market is rapidly moving. Check into the channel each and every day so you never miss a beat. And I'll catch you guys in the next one.